Hey, what's going on? Welcome back to Dapper Dividends. Today is a rather momentous day because I initiated a position into something that I have been meaning to do for quite some time, and I'm doing it in a way that will allow me exposure to markets outside of the United States. This is again for the bridge portfolio that I'm building. So, what did I buy? Check it out. This is the company that I bought. That's right, it's Volkswagen, ticker VWAG.Y. It is an ADR. We'll get to that in a minute. Check out the brands that they have. I wasn't aware that they also had Porsche and Lamborghini under their name brand. So it is not without risk. In 2015, they had a bit of a company upheaval with the diesel emissions scandal where they adjusted some of the software settings to underreport emissions. New CEO came in, but they are looking to the future as they did hire Alexander Hitzinger, the 49-year-old engineer who had defected to Apple after helping to develop Porsche's 919 race car. And he has been lured to VW in a huge challenge, spearheading their Mission T, trying to catch Tesla and be one of the preeminent EV companies on the planet. Articles like this started popping up and catching my eye that VW could potentially join Tesla as the EV superstars by the year 2025, according to UBS. They liken Tesla to Apple and VW to Samsung. And speaking of UBS, they did say that Volkswagen's electric car, the ID4, does stack up well against Tesla in the UBS teardown. Obviously, the future is gearing toward EVs, but that's going to take some time. So Volkswagen is still an ICE company, but they are strongly trying to pivot toward EV and potentially see the day when they are fully an EV company. So they do have a nice little mix of the EV and the ICE engines and the hybrids. But that ID4 is what is designed to compete with the Tesla Model Y. So do yourself a favor and look up the ID4, check out some of the reviews. Very slick car. It's a little bit more cost effective than the Tesla Model Y. And with that cost effectiveness being cheaper, you do get less options, but it is a very, very nice competitor to that Model Y. But the best thing, check this out, the VW bus, the all EV bus, the ID Buzz. They're very plugged in, and I'd like to be plugged into this car. Look at those screenshots. I showed my daughters this. Looks like somebody's living room in the back there. Super cool. So this is still a concept, but what a concept it is. Dipping into a few of the numbers, Volkswagen manufactures and sells automobiles primarily in Europe, North America, South America, the Asia Pacific, and was founded in 1937 and is headquartered in Germany. Currently trading at 5-year highs, right around $27.62 at the time of this recording. 5-year return with dividends invested is 101.6%, 16.6% analysts predicting future growth. Now, always take that with a grain of salt. Nobody knows what's going to happen in the future. That is just their best guess. 27% 5-year compound annual growth rate, looking very solid. Financial health looks good with the short-term assets exceeding the long-term liabilities. So like most companies, they do have a bit of debt, but check that out at the bottom that the interest payments are well covered by the EBIT, the earnings before interest and taxes, at 11.6 times coverage. This shows the dividend at 2.5%, but I figured it out as 2.04% with today's current market price. So amidst the upheaval and the turmoil of 2015, they cut the dividend in 2016, but it has been on a nice trajectory up, but COVID flatlined that for the time being, but they do expect it to increase and pick up in the future. And the current payout is only 28% of earnings per share, so that is super low and tons of room to grow that dividend. And the famous Simply Wall Street valuation, all they're doing is looking at prices in the future and discounting it to a price back to today is the simplest way I can put it. They give a fair valuation of $51.13, making it about 46% undervalued from current prices. And check it out, a word about the ADR, the American Depository Receipt. So what that is a custodian, a banking institution will buy shares and then give us receipts for them so we have easier access to the foreign markets when those companies are not traded on the US markets. Some of the ADRs are sponsored and traded on exchanges, major exchanges, but Volkswagen is traded on the OTC market or the pink sheets. And that ratio is 1 ordinary share for 10 ADR, American Depository Receipts. So when you buy one of these ADRs, you are buying a tenth of a share of Volkswagen's 1 ordinary share that is being traded or is in Germany. And now the worst for last, the dividend. ADR fees are no fun, but I wanted to pick a company that will give me some money back while I wait for them to become the beautiful shining stars of the EV world. Currently paying 1 dividend a year, so it's an annual dividend, and the last time around it was 56.36 cents, so just over 56 cents, but the tax withheld was almost 15 cents at 14.9, and the fee rate to the depository custodian is 5 cents a share, which brings the net rate down to about 36.5 cents a share. So that 2.04% dividend gets chopped down to 1.32% cash in hand. So that knocks it down a bit, but it's okay because I'm trying to diversify and I'm not just looking at dividend yield. I know that dividend is very safe, and I think Volkswagen has some very exciting things coming out. They're not as sexy as the Neos and the Xpangs, but that's okay. They've been around since 1937. It's a solid company. They have a lot of brands under their portfolio. And one thing I really, really like is that they can mainstream that ID4 into the United States market because they have over 600 US dealerships that they can sell at. So there's competition coming for Tesla. Tesla still is the king, quite honestly and obviously, but I think competition's coming and I'm putting my chips in with Volkswagen. I'm not going crazy. It's not going to be a massive portion of my portfolio, but I would like it to be maybe about 2% of the portfolio when it gets to scale, and I'll be looking for a pullback. But as I like to tell you, I always look for a initial tranche to buy. So I just get in, I get the shares, and that way when I see I'm buying high and they drop low, I'm more inclined to buy because I already have that number pegged to a much higher starting yield and starting position. So follow me on Twitter at RustyRam78. Check me out on Instagram at Dapper Dividends. And as I like to say, please, expertise comes from the community, so leave a comment in the comments below because you know where the comments go, and we would like to talk to you, and I will talk to you in the next video.